It's never good when you announce an acquisition and your stock drops 16%, but that's exactly what we saw today when Rocket announced that they were buying Redfin. I want to go through some of the details and why I think the winner here is not either of these companies. Yes, Redfin gets a nice premium. It's actually a pretty disappointing valuation considering where they've been over even just the past few years. I think the real winner here is Zillow because they are now in a better position to be a platform in the housing business. I'll walk through some of those thoughts today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's go right to the reaction first. Of course, Redfin stock is up about 67% today. This is late in the trading day on Monday, but not quite as good a reaction from Rocket Companies, the company that's actually acquiring Redfin, down 16%. Now let's put a little bit of context behind this. Over the past year, company is about flat, market's up a little bit, and you can see that shares are up about 8%. And over the past 5 years, shares are down 47%. I'll go through some of their performance and one of the reasons investors may be a little disappointed. But before we get there, let's go through the acquisition and what the company is at least saying about this. So the combination of these two companies, and Redfin is actually much smaller than Rocket Companies at this point. Instant top of the funnel increase, 50 million monthly visitors for Redfin, driving 1 million buy and sell contract transactions per year. So the idea, if you're Rocket Companies, is, hey, we're selling mortgages. We want more people to look at and consider our mortgages. If we just vertically integrate with a company that's doing transactions, the realtor side of things, that could be nice synergies there. I'm going to explain why I don't think that makes a lot of sense long term, but that's at least the idea behind it. So this will ultimately drive mortgage growth, as I mentioned, and you can get personalization at scale. These are two companies that have leaned into the technology side of the housing business much more, so it makes sense a little bit from that perspective. The transaction is going to be 100% stock. So this is the exchange ratio is 0.7926, which is $12.50 per share for Redfin. That's why their stock is up. They were trading significantly lower than that, and then the pro forma ownership of the company is going to be 95% Rocket shareholders and 5% Redfin shareholders. It values the company at $1.75 billion or $2.36 billion from an enterprise value. Enterprise value to 2026 estimated revenue 2 times. So not a very high multiple. And I think that makes sense when you look at their financials. I'll get to that in just a second. But what they're saying is this is a hyperscaled home ownership platform. Number one brand in mortgage, origination clients, 365,000, servicing clients, 2.6 million. Add to that 2,200 agents, 50 million monthly users, and a household brand. So that's the idea behind the transaction. Like I said, I don't think this makes a lot of sense. And part of it is because of the financials of both of these companies. Let's start with Redfin. Redfin is one of these companies. I know a lot of investors really like Redfin. Maybe they like the experience, but the financials just don't back up this being a phenomenal housing company. I frankly don't understand how a company in the agent business, who's actually taking a piece of each financial transaction in the housing market, loses money. Lost $164.8 million in the past 12 months. Yes, that includes everything like stock-based compensation, but this should be a money-making machine because you're not putting capital to work. You're not building a manufacturing plant. You're just taking a piece of each one of these financial transactions. So this should be a phenomenally successful business, but it really hasn't been. And it hasn't been historically. Let's look also at Rocket. You can see that they had a great year in 2020. Everybody was refinancing their mortgages. That makes sense. But even then, they weren't particularly profitable. Now, $29.4 million in net income over the past year. But you add the past 3 years together, you only get to about $60 million in net income over 3 years. This is a company worth $26.5 billion. So that's really where I question this transaction. So who does this ultimately benefit? I mentioned this earlier. I think this benefits Zillow because Rocket and Redfin are now basically vertically integrating, and they're making competitors out of previous partners. If you think about if you were a mortgage company who was working with Redfin, now you're going to be pushed to the side. Who are you going to work with now? Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Who has more traffic than Redfin? Well, here's your answer right here. Zillow. You can see that Zillow Group, that is the blue line, and then the Realtor.com group, that is their second place competitor. Obviously, Redfin is going to be much behind that. So in the housing market and any sort of market that's aggregating where you actually want to be a platform, and again, that is what Rocket and Redfin are saying, is they want to be a platform by combining. But being a platform means that you should be working with other suppliers. That's not what they're doing with this transaction. That is what Zillow is doing. And you can see that they have the audience, a much bigger audience than Rocket is acquiring with Redfin right now. Add in the fact that this is not just about buying homes, it's also about rentals. They recently announced a partnership with Rent Dot, which is actually owned by Redfin. So that traffic is going to now go through Zillow. That's where this is ultimately going to be monetized. So they're increasing their lead in rentals, again, as a platform provider. And that's with the help of the Redfin side of the rental business. And this gets to what Zillow is ultimately building, which is what they call the housing super app. And this is where you can just do everything on the Zillow app. So you can set up tours, you can find an agent, you can do messaging, actually integrated title and close. On the agent side, you can manage all your tours, you can find mortgages, you can find rentals, all kinds of things. And they're working with all kinds of different suppliers in the market. So they're not vertically integrating, they're creating a platform that then other companies can plug into. That's how you build a platform business. You don't build a platform business by then buying a mortgage business. That's not something Zillow's going to do or should do, but that's exactly what we're seeing with Rocket. And I think they're just seeing a good financial transaction and a strategic financial transaction, but I think it actually makes both of these companies worse. Redfin and Rocket are actually in a worse strategic position compared to Zillow, and Zillow is already the leader in the market. So that's where I think the real opportunity for investors today is with Zillow stock. And Zillow's market cap is only about half of what Rocket plus Redfin is going to be. So the upside opportunity is there as well. It's just a much clearer strategic picture for them than it is for Redfin and Rocket. And keep in mind that neither of those companies are particularly profitable. You combine them together, they're actually going to be a money-losing company in a combination. So I think this is one of the stranger acquisitions that I've seen recently. Rocket not growing at the moment. They've been in decline since 2020. That makes a lot of sense because mortgage originations have been declining over that period of time. And I think it's just a desperate move because what are you going to do? You don't really have a differentiated service as a mortgage provider. That's something that dozens and dozens of companies provide. Financing you can get almost anywhere. So what do you do as a company? Well, I guess vertically integrating with one of the realtors that's for sale out there and is a relatively cheap, at least from a price to sales perspective. That I guess is the move that they're making. But I think ultimately, and Zillow is a stock that I own, but I think strategically and financially, this will be the kind of move that helps Zillow because it shows that they are the only company that's looking at this really as a whole housing platform. And I think more and more companies are going to plug into that platform. That's going to create a flywheel effect. It's going to attract more users. It's going to attract even more suppliers. That's how you get an aggregator in the market. That's how a platform grows. That's why I own shares of Zillow. But let me know what you think about the acquisition that Rocket is making of Redfin and the potential that Zillow is actually the company that's going to benefit despite not spending a dollar today. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.